without further ado, let's get started. On the first page there, I want to go through the benefit highlights for this year, and this will kind of give you an overview of some of the issues that we're going to discuss today. The first bullet point there is that our medical insurance is going to change to Humana for starting July 1st, okay? We're moving away from Blue Cross and Blue Shield. You'll also find that we're only going to offer two plans this year, the traditional PPO plan and the high deductible health plan, all right? And the reason for that is that Humana does not offer an HMO offer, okay? So that's why we're going to have to eliminate the HMO plan offering. You'll also notice that both plans have access to Humana's Go 365 program. That is a wellness program, and for my money, it's the best one that's offered by any insurance carrier. And I'm going to encourage everybody to look into that and hopefully to participate in it. And we'll get into a little bit more of that. We've got a page devoted to Go 365. Now, the main reason that this is happening is because of the renewal that we received from Blue Cross and Blue Shield. So let me address that real quick. Blue Cross and Blue Shield had a 109% loss ratio on Kansas City, Kansas Community College. What that means is for every dollar that they collected in premium, they paid out $1.09 in claims. Now, that doesn't count their overhead, okay? So they obviously lost money on this group, and that's neither here nor there, but that's what happened, all right? Because of that, we received a 39% increase to the rates from Blue Cross and Blue Shield. And so, of course, our job is to go out and find solutions. And Humana came in at a rate that was much less expensive than the Blue Cross and Blue Shield renewal. So that's the reason for that change, all right? Okay, the next bullet point here, as a reminder, all medical copays, RX copays, and deductibles all count towards your maximum out-of-pocket, all right? That's not a change, that's just a reminder. And once you reach that maximum out-of-pocket, if you should ever reach it, then everything in your plan is covered at 100% for the remainder of the plan year, all right? Including your office visit copays and your prescription medication. The third bullet point down, you can find Humana network providers by visiting www.humana.com. We also have a supply of printed Humana directories over here in the corner, and you're welcome to take one of those when you leave today. The easiest way to use the printed directory, is to use the index in the back of the directory to see if your doctor's in the network, okay? Now, the other thing that's in that bullet point that I want to point out to people is that Providence Medical Center and St. John Medical Center are not in the Humana network, all right? That just happened as of January 1st of this past year. And the reason for that is their contracts are renegotiated periodically, and they just couldn't come to an agreement on that contract, all right? Now, many of you I know use those facilities, and I apologize that they're no longer going to be in network as of July 1st. But I want you to understand, if your doctor contracts independently with the insurance carriers, okay? So it is very possible that the doctor you're now seeing still is contracted with Humana, even though he might normally refer you to Providence Medical Center for hospital services. The other thing I'll tell you about doctors is that most of them have admitting privileges to more than one facility, okay? So again, just a quick note that you want to avoid using those facilities starting July 1st. Now, one other thing I'll share with you, and that's what my office is doing to help with that. I have requested a report from Blue Cross and Blue Shield to find out what kind of volume your group was using with Providence Medical Center. And we're going to share that report with Humana so that they can use it as a bargaining chip to maybe start that conversation again and get them back into the Humana network, okay? So we are trying to solve that problem. The next bullet point down is similar to your current plan, and you have this on your current plan, that Humana also offers a telehealth service. What a telehealth service is it's an opportunity to call up using your smartphone and receive advice from a doctor about minor health conditions, okay? It can save you some time and money by them being able to prescribe something right over the phone for you and get your problem addressed quickly and easily. And we'll talk a little bit more about that later as well. The next one down is the Employee Assistance Program. This is a part of all Humana plans. An Employee Assistance Program in general is an 800 number, a confidential 800 number that you can call for any type of life event that you might be experiencing and need some additional guidance on, all right? So common things that people call in for are counseling, or maybe you need some financial assistance. You've run into a rough patch and you need some help figuring out your finances. Maybe you need access to a lawyer and you don't know who to call, okay? Those are the types of questions that they will field and that they will put you in touch with a professional that can help you with those life type issues, okay? Next bullet point down, the dental insurance as well as the following one, the vision, life, short-term disability, are all going to be transitioning over to MetLife, all right? And the reason we're doing that is much the same reason. Assurant raised our rates and we were able to find a better rate through MetLife. Now, one of the things I want to remind you about on the dental plan is that the MetLife dentists, again, they have a network, okay? And MetLife gets a much stronger discount than what even Delta Dental gets. But the number of dentists inside of that network is smaller, okay? If you, we certainly want you to use a MetLife dentist if at all possible, but if you happen to use an out-of-network dentist, don't worry about it, because the way we wrote the contract is we're going to pay those out-of-network dentists at the 99th percentile, all right? So when we do that, in most cases, I'm going to say, well, in most if not all cases, that dentist is not going to bill you for that extra 1%, okay? They'll go ahead and accept 99% of that full payment as payment in full, and you won't have to worry about it, okay? But again, if possible, use a MetLife network dentist. Okay, the next one down is just a note that we will no longer be offering the voluntary long-term disability program. And the reason we're doing that is because CAPERS, by and large, provides that coverage for you, and so it was felt that that program was no longer necessary. We also have a little note about flexible spending accounts. I'll cover those extensively, as well as health savings accounts. We encourage you to participate in both of those programs because they allow you to save some tax dollars. Did you have a
question? Back to your other previous one about CAPERS. Can we purchase more?
Additional coverage on long-term disability?
Yeah.
No, you cannot.
Okay.
And then the last bullet point is just that we are going to be using our same enrollment tool that we've used a couple of times with Employee Navigator, and again, we'll help you with all of that here in a minute. Yes?
I was just going to tell Chris you can't do it with CAPERS. Only with CAPERS. He doesn't do it with CAPERS.
Oh, I'm sorry. You can buy additional long-term disability coverage through CAPERS? Okay. Thank you for that, Sharita. All right. Okay. We'll go ahead and move on through the packet then. The next page gives you my contact information, as well as Emily Gibson in my office and Sharita's contact information. Should you have any questions concerning enrollment, any of the products that we're going to discuss, if you have any questions after open enrollment and you need some help with some things, please feel free to give us a call. Okay, that's what we're there for, all right? One other thing I want to point out right now, while I'm thinking about it, is some of the premiums for the family coverages on your medical plan changed dramatically, okay? And the reason they changed dramatically is because Humana does their math differently than Blue Cross and Blue Shield, and they do their math differently than Aetna, okay? And they put more of the burden for the whole plan's premiums onto the family coverages. There's nothing I can do about that, all right? But what I can do something about is help you folks that find yourself in an employee spouse enrollment, an employee child enrollment, or a family enrollment, okay? And if you'd like to speak with me or have some individual counseling for your specific situation, please, I would like to do that for you. There are options available for you that can save you some money, but it depends on your particular situation. Now, in not all cases am I going to save you some money, but in most cases I will be able to help you, okay? So please contact me. And one other thing, while I'm on that subject, if you have a pen, I want you to write down this number. The number is 913-333-3380. If you call that number, you can get an individual quote, all right? Your July 1st effective date, this is your open enrollment period, and you are eligible to take an individual policy if you wish, okay, at this time for you or your family members. And that's one of the tools that I will be using in my counseling sessions for those of you that want that, all right? I'll give you the number again, 913-333-3380, all right? And they can give you, like I said, they can give you quotes, and you can compare those quotes to what you're paying through the college's plan and see which avenue is best for you, okay? If you'd like to self-serve, that's the way you do it. Or again, just contact me and I'll help you with that. All right. Any questions on that? I know that was a lot already. The next couple of pages are your rights and disclosures. This is information that we have to provide to you on an annual basis. I'll read through it at your leisure. If you have any questions on that, certainly give me a call. I'll be happy to answer them. Page 5 has all of your new contact information, all right? So all of the web addresses, all of the telephone numbers have been updated. So that is there just to give you an easy reference should you need it after today. Page 6 is the wellness program, and I do want to spend just a little bit of time on this, okay? Because the reason we experienced a 109% loss ratio is utilization, all right? More people use the plan. Now, that's what it's there for, so I'm not saying that you shouldn't have used the plan, okay? But it's because of utilization. If we're going to lower our renewal in the future, we're going to have to curb our utilization. And the only way to curb our utilization is by making ourselves healthier, okay? That's the only way, folks. Go 365 gives you an opportunity to do just that, okay? And the way the program works, they give you metallic levels. And you start out at a blue, and by signing up for the program, and they give you the instructions on how to sign up, all right? By signing up for the program and taking a health risk assessment, all right, you graduate to a bronze level, okay? And then by doing a biometric screening, which is just a fancy word of saying doing some blood work for your normal regular wellness check, okay? You earn points, and using that and a couple other things, you'll get to a silver status. That's where we want everybody to try to achieve this coming year, okay? Is to achieve silver status. If we're able to achieve silver status by the time we renew next year, Humana will give us a 4% discount on our premium right off the top, okay? But we have to have a certain amount of participation, and I believe the number is 40%. We got to get 40% of you folks to participate in the program and achieve that silver status. Now, I just did another, it's very achievable, okay? And here's my comparison. I just did another meeting before coming to this one for an organization right here in Kansas City, and they have achieved an 80% participation at silver status, all right? Now, they worked at it, I'm not gonna lie to you, and they put a lot of effort into it, okay? But it is achievable, and I'm giving you that as an opportunity to kind of help yourself on next year's renewal, all right? Okay. Next page then is eligibility. As you all know, anybody who works 30 hours or more is eligible for your plan, okay? This is your open enrollment period. You can make any changes you want to your plans right now without any questions asked. So you can add dependents, you can take dependents off, you can add plan coverages, you can remove plan coverages, and nobody's going to ask you any questions about that. Outside of your open enrollment plan, and you'll see that in the very next section, you must have a qualifying event in order to make any changes to your elections, okay? So those are things like marriage and divorce, birth or adoption, and things of that nature, and they're all listed there for you, okay? The next section down is the new nurse line. That's still available for you. We encourage you to use it. Again, that's a free service. If you don't know if you should go see the doctor, call them up. You know, it doesn't cost you anything. And they can help advise you as to where the best place of care would be. Starting on page 8, we talk about preventive care. This is all the services that are provided free of charge through your medical plan. And it doesn't matter what medical plan you have, all medical plans have to cover these services at no cost share to you all as plan participants. Down at the bottom of the page then is the new telehealth program that I mentioned. Again, this is through your smartphone. You do have to sign up for the app, okay? And you'll also notice that there's a $40 charge every time you use the service. But let me give you an example of that. I have seasonal allergies. Things happen, the symptoms are the same every year, okay? I get the runny nose, you allergy sufferers know what I'm talking about. I can call up on the telehealth, talk to a real doctor, say, hey, I've got seasonal allergies, here's my symptoms, here's what I normally take, can you give me a prescription for that? Yes, sure. He gives me the prescription, I go in and get it filled, done, okay? I've just saved my time in going to the doctor's office, waiting for 20 minutes for him to show up. I'm not disparaging doctors, by the way, but you know how the routine works, okay? You wait, you go, you see the doctor, come out with your script, okay? I've avoided all of that, okay? Now, yes, I paid $40, which if you're on the PPO plan, that's a little bit more than your office visit copay, all right? But if you're on the high deductible health plan, that, my friend, is a big savings, okay? And I'll explain why as we get to that. Questions on telehealth?
How much does that save the college?
It's all baked into the premium, so it really doesn't matter what service you use on that front. Okay?
So let's say if I need a refill on my prescription,
Uh-huh.
but before the refill, doctor needs a blood work. So how does that telehealth work?
Well, if you needed blood work in order to get to update your prescription, that wouldn't help you. So you wouldn't want to do that. You'd want to go in and of course, see your doctor for that. Okay? Yeah, it's only for minor things. And again, if you need some guidance on whether you should use that or go to your regular doctor, call the nurse line. They could probably help you decide what's the best avenue to use. Okay? All right. So the next page then is the health insurance plans, and I want to go through these in some detail and answer any questions that you might have on these. Okay? So the first thing I want to point out is up in the very top, in the paragraph in the very top, we tell you what network we're using. It is a Humana network, and they call it Choice Care. All right, that's important because when you do an online search, you'll pull down a menu, and there are several networks that you'll see Humana uses. Okay, they're all Humana-owned networks, but they label them, and this one's called Choice Care. Right? You'll also see a Choice Care Plus. Don't worry about that one. You want to choose Choice Care. All right? Okay. The way the plan works then is this one has a $1,000 deductible, and then the plan pays 80%, and you pay 20% until you reach a maximum out-of-pocket of $3,000. Now, I refer to that as your major medical part of your plan, because most of the time you will not spend deductible or co-insurance dollars unless you have a major accident or a major illness, okay? Most of us use all these other benefits that we'll discuss, okay? And by the way, that is a change, and I don't want to diminish that fact. So last year, just for comparison, last year your deductible on the traditional PPO plan was $750. So this is a $250 increase on the deductible. And last year, your maximum out-of-pocket was $1,750, okay? So the maximum out-of-pocket here is almost double. The other thing I want to share with you is we will give you deductible credit for what you utilized under the Blue Cross and Blue Shield plan, okay? So the way that works is in July, I'm going to ask Blue Cross and Blue Shield for a report. And I have to wait till July to do it because the plan is going through the end of June, okay? They'll give me that report and I'll forward that to Humana, and Humana will load all those deductibles and co-insurance credit to your account with Humana, okay? Remember that this deductible and co-insurance, they all reset to 0 every January 1st. And that's not a change. That always happens that way. It's just that when you change carriers in the middle of a plan year like we're doing, they have to give you some mechanism to give you that credit. Okay, does that make sense to everybody?
Yeah. So that's a rollover deductible thing they call
No, not really. That's in reference to the flexible spending account, and I'll get to that here in a moment, okay? Okay, so let's talk about the other benefits for this plan. The primary office care visit is a $30 copay. The specialist is a $55 copay. You do not need to get your primary care physician's permission to see a specialist. You can make that decision yourself, okay? Routine preventive care, as I mentioned earlier, is covered at 100%, no cost share. Childhood immunizations, as you would imagine, again, covered at 100%. Diagnostic tests, either an x-ray or blood work, again, covered at 100% with no cost share under this plan. Your high-tech imaging, like CT scans, PET scans, and MRI, they all fall to the deductible and the co-insurance, all right? Inpatient and outpatient hospital services, again, as you would imagine, fall to the deductible and the co-insurance. Mental illness or substance abuse for the office visit, it follows the same office visit as your primary care physician. It's a $30 copay. If you need to go inpatient or outpatient treatment, that would fall to the deductible and co-insurance, all right? Emergency room services are a $250 copay, but we will waive that $250 copay if you are actually admitted to the hospital. Now, a quick note on emergency services. Ambulances are instructed to take you to the closest facility for wherever you had that emergency, all right? So, if it's here and they take you to Providence Medical Center, do not worry about that. If that's the closest facility and you receive some treatment there, that's going to be paid as if it was in network because it was an emergency, all right? The only stipulation that the plan makes is that if you're going to be there for an extended length of time, once you're stabilized, they want you to get transferred to an in-network facility, all right? Again, please don't worry about that. I just wanted to make sure you're aware of that.
Wouldn't that cost you more if they transport you in an ambulance?
Well, the ambulance ride is going to cost you, yes, but it's not going to cost you more. It's actually going to save you money because you're not going to be paying out-of-network charges. All right? Okay. Urgent care is covered at a $100 copay. And now let me talk about urgent care for just a moment. Urgent care centers are open on nights and weekends. All right? Typically, they're associated with a hospital system, so you're going to want to avoid Providence Medical Center urgent care centers because they're not going to be in network. But any other urgent care center, that's where you'd want to go if you have need for medical services and it's on a night or weekend and you must go in to see the doctor. Obviously, you've got the telehealth, you've got the nurse line services that you can also use, okay? So this would be kind of the last choice, but if you actually need to see somebody, that's the place to do it if it's not an emergency. All right, make sense? Okay, the prescription drug coverage is $10 for generics. That's your level 1 prescription drugs. Level 2 and level 3 are brand name medications, and it's either $40 or $70 copay, depending on the price of the medication, all right? Level 4 and specialty drugs are those high-cost medications that you typically see advertised on TV. So things like Humira, there's some injectable medications that are very expensive. They fall into that category. So if you use the Humana specialty pharmacy, you'll pay 25%, all right? If you use any other specialty pharmacy, you'll pay 35%. That's the differential between the two that you see at the tail end of that, okay? Maintenance medications, or your mail order program, is covered if you pay 2.5 times the copay, you get a 3-month supply, so there's a bit of a savings there. And a note on those of you that have used the mail order through Blue Cross and Blue Shield, it's a brand new company. You are going to have to get your prescription updated and send it to Humana if you do want to use the mail order option, all right? Okay, and then at the bottom of the page are the premiums. Now, you'll notice here that the college decided that we should pay the same amount towards the coverage regardless of how you're enrolled, and that's what you'll see there. The KCC contribution is identical across the board, okay? But it has caused the employee family particularly and the employee child rate to rise dramatically over what they were last year. The employee-only premium has remained exactly the same, and actually the employee spouse premium dropped a little bit, okay? And again, it was just because of the math, as I mentioned at the outset, just the way Humana calculates things. Remember that premium comes out on a pre-tax basis, okay? And I'm talking to you folks that want to self-serve. So if you get an individual policy, you're paying that individual policy with after-tax dollars, all right? So again, you're paying an additional 25 to 30% because there's no tax savings involved in paying that premium. But we'll take that into account, or I will take that into account when I counsel you about what your best options are if you'll find yourself in that situation, all right?
Can that come out of our paycheck by any chance?
It cannot, no. All right? Question?
What is the difference between copay and coinsurance?
Okay, very good question. So a copay is the amount of money you pay after you have reached your deductible. Or excuse me, just the opposite. The copay is a set dollar amount, okay? So for instance, your doctor office copay is $30 under this plan, all right? Coinsurance is that part of the insurance that you pay after you have met your deductible. So you're sharing in the cost. The insurance pays 80%, you pay 20%. That's co-insurance.
So if we have met our deductible, after that, do we have to pay any coinsurance? or
You
not?
do until you reach your maximum out of pocket,
Oh,
okay? And once you reach that $3,000 maximum out of pocket, then your co-pays go away, everything's paid for 100%, and your co-insurance goes away. You don't have to pay that anymore either. Everything is paid at 100%, all right?
So basically, it's from $1,001 to $3,000.
Correct. That's what the co-insurance is.
Mhm.
All right. Okay, let's look at the next page, and this is your high deductible health plan. Now I'm going to tell you folks, you need to pay attention to this thing, and don't let the name fool you. All right, this is a good plan. This is the plan that I'm on. All right, my wife and I. The deductible on this plan is $3,000, and that scares people. Okay, I get it. But you'll notice that the co-insurance, after you reach that $3,000, is 100%. So the plan pays everything after you hit the deductible. Now, you'll also notice that your routine preventive care is covered at 100%, no cost share, just like I said before. On all plans, that's the way it works. So let me give you an example. When I go see my doctor, and I'm making up some numbers. I don't know exactly what he charges because I haven't been to him in a while, but say it's a $120 cost that he normally charges people. Humana will get a discount off of that. Let's say it's $30. That leaves a balance of $90, and I'm going to pay all $90 out of my pocket, all right, for that office visit. And then we're going to accrue that $90 towards that $3,000 deductible. You with me so far? He writes me a prescription. I go to the pharmacy. The pharmacy says, you know what, that prescription cost you $250, okay? But again, Humana's gonna give me a discount off of that, and maybe I pay $200 for that. Make no mistake about it, I'm paying $200 out of my pocket for that medication, all right? Again, that's accruing towards my deductible. And then if I meet the deductible, everything's paid for at 100%, okay? So, generally speaking, this plan is really good for those of you that don't use very many medical services. All right, if you're like myself, you don't go to the doctor very often, then this can be a great plan, a good plan for you, okay? Or the opposite is true. If you know you're gonna hit your $3,000 maximum out of pocket, this can be a very good plan for you. And the reason for that is at the bottom of the page. You'll see that the college contributes to a health savings account for you, all right? They contribute $50 per pay period, which adds up to $1,200 per year. So in effect, you've just reduced your maximum out of pocket from $3,000, right, to, what is it, 1,800. Yeah, $1,800, yeah, that's right. Does that make sense? 1,800 plus 1,200 is the $3,000. So if you have effectively reduced your out-of-pocket maximum by taking this plan, all right? Now, it's not for everybody, okay? If you're on a lot of prescription medication and you don't hit the maximums, I'm gonna tell you to take the PPO plan, okay? If you go see the doctor fairly regularly because, and generally speaking, because you're taking some medications, you need to get followed for those things, yeah, the PPO plan is probably the best plan for you, all right? But for many of us, it's the high deductible health plan, okay? All right, yes?
So I'm confused, how this plan is good if you don't want, I mean, if you don't have a lot of problems and you don't have to go to the doctor a lot?
Because the college is gonna give me $1,200 to use for any of my out-of-pocket expenses. So like I told you before, if I need to go see the doctor and I'm gonna pay that $90, I have $1,200 I can use to pay that $90, okay? Does that make sense?
But that's only at the end of the year.
No.
$1,200 isn't gonna be right there.
It's not gonna be
July
there immediately,
25th.
that's true, because under a health savings account, it's a money in, money out plan. So we'll talk about health savings account in the very next page, so I wanna hold off on that for just a moment, all right? But you'll notice that the premium down there is, it's $1,250, the same cost on an employee. Similarly speaking, and again, this plan is it's identical in benefits to the one that was offered through Blue Cross and Blue Shield. But again, the employed child and the family rate took a big hit on this plan. One last thing I want to say about this plan. It's an embedded deductible, and that's important. What that means is that if you've got a family on this plan, only one person need to satisfy that $3,000. The rest of the family all totaled together would add up to that family deductible, all right? That's important because not all plans are like that on high deductible health plans. Okay, so I want you to turn the page and let's talk about health savings accounts because that's an integral feature and why a person wants to choose that high deductible health plan. Health savings account allows you to take money out of your paycheck on a pre-tax basis and put it into this savings account. Any money you put into this health savings account is always yours until you use it, okay? It rolls over year over year. You can accrue that money, okay? It is a money in, money out plan. You have to have the money in the account before you can actually use it, all right? But unlike a flexible spending account, and we'll talk about that in a moment, you can make changes in how much you contribute to that plan. So for instance, let's say I know that I need to have a knee surgery. And I know I'm gonna hit that $3,000 max out of pocket, okay? And I would wanna do it in the summertime so I don't have to worry about it when school starts, okay? I can have them take $3,000, and this is a bad example, and I apologize, but it's just for the example purposes. I can have them deduct $3,000 out of my paycheck and fund that account 100% in July, okay? Then I go have my knee surgery. I know I'm gonna have to pay that $3,000. I take that $3,000 out of my health savings account and I pay the provider, right? Now, how much did I really pay for that? Well, I really only paid $2,000 for it because of the tax savings. Remember I told you you save about 30%? That makes sense? Because you're using pre-tax dollars to do that, all right? Now, most people aren't gonna be able to do that, I get it, okay? But the reason I say that, and then here's the last part of that, after I've done that, then I tell Sharita, you know what? I wanna change my contribution and I wanna take it down to 0. Because I I've already spent it. I don't need it anymore, right? Now, of course, the college is going to contribute theirs every pay period, okay? The same is also true the opposite way. Let's say that, okay, I see this is going to work for me. I'm going to put $50 of my own money into that plan, all right? Now I'm getting $100 per pay period going into my health savings account. And let's say in December, I need some extra cash because I got to buy my wife that Christmas present she's always wanted, right? So I say, you know what? I don't want you to pull that money out for the next 2 months. So I want to take my contribution down to 0. All right, Sharita changes it in payroll. She takes it down to 0. You get that extra money to do whatever you want with it, okay? And then maybe in January or February, you say, okay, my finances are back in step, and I want to start contributing again. You can do that, okay? It's very flexible that way, all right? If you change from a PPO plan and take the high deductible health plan, and you have a major health event, I really, really want you to call me, okay? Because I want to review those rules with you so that we can use your money as efficiently as possible. Because basically what I'm telling you is you want to use the plan and push all that money through there so you can save those tax dollars, okay? The other thing I'll tell you about health savings account is this. You can use it for any out-of-pocket medical, dental, or vision expense for you or your family members. Now, your family members do not have to be on your plan in order for you to use this money for their expenses, okay? So that, again, that makes it very flexible, all right? Yes?
I have kind of a weird question.
Okay.
So let's say I contribute to the HSA, and you just said I can use it for any medical,
Dental or vision expense.
So that's a key word right there,
Uh-huh.
expense. I'm wondering, and sorry, I'm a
No, that's
little ignorant
okay.
to all this stuff. Next year,
Uh-huh.
when we have to sign up for a new insurance plan,
Uh-huh.
can I use that? Let's say I save up to
Yep.
$3,000. I can use that money that I saved this year with the HSA
Yep.
to buy my next year's insurance plan.
You can use it for out-of-pocket medical, dental, and vision expenses. You cannot use it for premiums.
No.
Okay.
Okay.
That's all I have.
But what that means is if this year you are on the health plan, and then next year maybe you do have an expense that you know you're going to have, but you're not going to spend all that $3,000. Maybe you know you're just going to spend $1,000 of it. Okay. You can switch and go to the PPO plan, but that HSA bank account is still in effect. Okay, and you can still use that money next year for whatever out-of-pocket expenses that you have. You just can't contribute to it anymore unless you're on a high-deductible health plan. Okay? All right, good question. Any other questions regarding HSAs? Yes, in the back?
Is there a 55 and over clause in that? Or?
Yes, on contributions. So let me talk about contributions. In 2017, the maximum contribution annually is $3,400, and for a family, it's $6,750. Now, family would include an employee spouse, an employee child, or a family. Those all count as family when it references the contribution. If you're over the age of 55, you can put an additional $1,000 on top of those figures that I just mentioned. All right? Yes?
So for example, my mom lives with me, so can I use that money on her medical expenses?
For her expenses, I'm unsure about that. And the reason is because I think the answer is yes if you claim her as a dependent on your taxes, okay? If you don't claim her as a dependent on your taxes, I'm pretty sure the answer is no. But I would want to look up and get the right answer for you, okay? So would you check that out for me real quick? All right, we'll get you the answer, all right? Any other questions on that? Okay, not to confuse you, but it probably will. On page 12, we're going to talk about flexible spending accounts, all right? A flexible spending account basically accomplishes the same thing as a health savings account in that we are saving the tax dollars for any money we contribute to the flexible spending account. Again, you can use it for any out-of-pocket medical, dental, vision expense for you or your family. So in that way, it's the same. The differences are this. First of all, if you participate in a flexible spending account, you cannot change your contribution, all right? If you tell me today when you enroll that I want to put $50 per pay period in there, that $50 is locked in for the entire year. And you can't change it unless you have a qualifying event. And we reviewed those at the beginning of the presentation. The benefit, though, is that you have access to the entire annual election on the first day of the plan year, okay? So going back to my surgery example, if I know I'm gonna have that surgery and I wanna dump in the maximum, which in the flexible spending account world is $2,600, I can do that, okay? And then go have my surgery, I know I'm gonna spend that money, I go ahead and pay the provider, and then I'll pay the plan back every pay period. Does that make sense? You've got access to all of it on the first day of the plan year, all right? Let's see. The detractor to flexible spending accounts has always been the use it or lose it rule, all right? So any money you contribute to a flexible spending account, you must use that money by the end of the plan year or you lose access to it, all right? Now to help you with that budgetary issue, the college does allow you to roll $500 over from whatever you didn't spend this year into next year's plan as long as you use it within 90 days, okay? So you do have that rollover feature, and that's what I think you might have been thinking about there, all right? As long as you've spent your flexible spending account below that $500 threshold, there's really no way you can get burned on that, okay? Does that make sense? What else? I think that pretty much covers it. Any questions on flexible spending accounts?
Well, this isn't about flexible, but back to the HSA contribution that the college will make, is that rolled over?
Yes. Yeah, you'll never lose that money. You'll always have it there until you actually use it. Okay? Yes.
I have another question on the HSA and the
Yeah.
usage. Could I use that to join a gymnasium, something like that?
No.
It's medicinal in the sense that it's wellness.
Yeah, I know, but you cannot use it. The rules are pretty specific on that. Okay?
What was the question?
The question was, can I use that health savings account money or flexible spending account money for that matter to pay for gym memberships? And the answer to that is no, you cannot.
Would Go365 pay for some of that?
No, but you do earn points through Go365 for working out at a gym and doing some of those things, yes. Okay? All right, let's talk about the
Can I ask one more question?
Yeah.
So the so this year, the FSA
Yes,
is available, whatever amount you choose is available July 1st.
right,
So that's the same as it was last year?
yes.
Okay.
Yep. The rules don't change. I'm just
Okay.
reviewing those for you. By the way, if you do find yourself that the health saving or the high deductible health plan fits better for your needs this next year, and you participated in the flex plan, for instance, all right, what you're going to want to do is shift the dollars that you were contributing to the flex plan over to the HSA. But don't worry, you can still use those flex plan dollars until they're depleted down to zero. So what you're going to want to do, obviously, is you'll have 2 debit cards. You're going to want to use your Flex debit card until you've depleted that account, and then you'll start using your HSA debit card. Does that make sense? Okay. Yeah.
So what is the difference between HSA and FSA? I mean, let's say if I already have HSA, then in what case I would be needing an FSA?
The only case that you would need that is if you changed plans, because the HSA is associated with the high deductible health plan, and the FSA is associated with the traditional PPO plan. Okay. All right. Let's move on to the next plan offering there, and that's the Dependent Care FSA. All right. That is available to anybody, regardless of your enrollment on either plan. It's meant to help pay for daycare expenses, okay, Dependent Care FSA. And again, I encourage you to look into this plan because you're going to save 25 to 30% in taxes for any money you move through the dependent care FSA. And you guys that have children in daycare, you probably know more than I do about what the expense of that is, okay? Now, a lot of times I get people tell me, well, you know what, I just don't want to mess with it because I take it off on my tax return. That's fine. You can save the tax money that way too. But I would tell you, you're losing out on about 9% in taxes, because if you do it on your tax return, you're not taking into account your FICA, that's 7.65%, and your state taxes, that's at least 2%, okay? That's how I get that 9% differential. So you really do save a little bit more money using the dependent care flexible spending account. The difference is, this is a money in, money out plan. You have to contribute the money to the dependent care flex account before you can pull it out, okay? The limit on this one is $5,000, and that hasn't changed as long as I've been doing these presentations. So no change on that, okay? Questions on any of that? All right, let's move on. We're almost done. The next page talks about your new MetLife dental plan. You will notice that the plan itself is identical to your Delta Dental plan, in that it covers preventive care at 100% and with no cost share. If you need basic services, would be like a filling, that's covered at 80%. And then a major procedure like a bridge work would be covered at 50%. You'll notice there's a calendar year deductible. It's the same one that you had with the other plan. It's $25, okay? Now, the next question I'm going to get asked is, this thing starts July 1st. If you go to the dentist in July, and you've already been to the dentist and paid your $25 deductible to Delta Dental, am I going to have to pay that new $25 deductible? The answer is yes, you are, okay? It's a different company. They don't know what you did with Delta Dental. Now, this is the real benefit though, and that is the calendar year maximum benefit is $1,500. That money is available to you starting July 1st. So, if you've got a whole lot of dental work to do, now's the time to do it, because you've got $1,500 that you can use with Delta Dental prior to July 1st, and you've got another $1,500 pot of money that you can use after July 1st to the end of the year. And then it's all going to reset back to zero on January 1st, 2018. Does that make sense?
Do the dental work in June.
Yeah, you can get some done in,
later.
right.
Okay.
Okay, and now, it doesn't, I mean, obviously, you're gonna have to be in a specific situation in order to use that. But some people find themselves in that situation. I just wanna make sure you know you can do that, okay? All right. The premiums on this, I'm happy to report, are exactly what they were last year, so there's no changes to that, okay? Next plan down is the vision plan. You will notice on the premium, I'll just kind of skip to that, the premiums on this vision plan are less than what you paid last year through Assurant, okay? The plan itself is pretty much the same plan design, and the other thing I'll tell you about a vision plan is, generally speaking, it is for those of you that wear eyeglasses or contact lenses. If you don't wear eyeglasses or contact lenses, yes, an argument could be made that you still want a vision plan because it's not covered by your medical, okay? You can get your regular eye exam performed once a year, and the cost for that would be less than what you would pay if you paid it out of your pocket, so I get that. But most people that don't wear eyeglasses or contact lenses generally don't get their eyes examined every year, so you're probably throwing your money away, okay? Questions on the vision? Yeah.
I have a question about like the glasses and contacts thing.
Uh-huh.
Okay, so like I got contacts in like October or something.
Okay.
How, like, are frames covered at all right now?
So you're in that special circumstance.
Uh-huh.
This can be a really benefit to you, okay? Because if you look at the benefits, the lenses are covered every 12 months, but frames are only covered every 24 months. Because you got contact lenses, that knocks you out of getting frames under the current plan, but starting July, it's a brand new company. So yes, you can go get those glasses and get the frames if you would like.
In July?
Starting
And then can I get contacts again?
No,
Okay.
you would have to pick one or the other.
Okay, got it.
Okay, yeah. Yeah, so it works similar to the dental thing in that you get that new benefit starting July 1st.
Okay.
Okay, yes,
I got two questions. One, so Humana and MetLife are two different companies.
that's correct.
Okay, the second one, I was trying to call my eye doctor because my eye doctor is at Providence Hospital.
Okay,
And I see the name is in this book.
yeah.
But
Providence Hospital has absolutely nothing to do with the vision plan.
She said they're under the VSP plan.
Okay, and that's the exact same network that this plan uses, so it would be the exact same as Assurant. You should have no trouble with that on your eye doctor.
Okay.
Okay, good question, now, thank you for that.
Okay, thank you.
Uh-huh. Anybody else? Okay, the next page talks about your life insurance. The college does pay a life insurance policy for you. The benefit is $35,000 paid to your beneficiary. I might just remind you that we keep track of your beneficiaries in our system, okay? And you want to make sure that you update that. It's very important. I know it's a hassle, but it's very important. I can't tell you how many times that I have to go search for something when there is that unmentionable claim and we can't find who to pay the money to. So please update your beneficiary. Yes?
Has that been going up over the last couple of years? I seem to remember 20,000 the first year.
You did.
4
We
years ago.
increased it to 35,000 at least 2 years ago, I think is when we
Oh,
increased
really?
that. Yeah,
Oh.
yeah.
Is that age dependent?
There is a age reduction schedule, so the short answer is yes, it is age dependent. And I can't recall exactly what the age reduction schedule is, but the details are on our system, okay?
What is AD, what, I didn't.
AD&D?
Yeah.
AD&D stands for accidental death and dismemberment,
Oh.
okay? So if you're on I-35 and unfortunately get killed in a car accident, the benefit doubles to your beneficiary,
Oh, wow.
okay? Other questions? Okay. Short-term disability is the next item down there. That's the same as it was last year. The college pays the short-term disability for you. The benefit is 50% of your pre-disability salary up to a maximum of $250 per week. The benefit begins on the first day if it's an accidental injury, and after the 7th day if it's an illness, okay? And it pays out for 26 weeks. If you want to, you can buy additional short-term disability coverage to bring your total weekly benefit up to $500 maximum. It's not $500 additional, it's a $500 maximum, both programs, okay? It is salary-based, so some of you might not make enough to get the full $250 add-on, but if you do, that's the maximum that is provided by the plan. Okay, it's the same elimination period, but the benefit is a little bit higher at 66.6% of your pre-disability salary. Questions on that? Yes?
What's considered short-term disability?
Short-term just means that it's that 26-week period. Long-term disability takes you out to retirement age. Okay? All right. The voluntary life insurance is also available to you, so if you need life insurance coverage above the $35,000 provided by the college, you can certainly buy it through the voluntary life plan. Let me make a comment about that. It goes up in 5-year age bands. So as you age, you'll pay more and more for the life insurance, all right? Because it is straight, what we call term life insurance. If you want to get a more permanent policy, you have to purchase that outside of the college, okay? I don't want to get too much in the insurance, but if you'd like to ask me about that, I'll be happy to share with you my opinions on life insurance.
This ends when you stop working for the college, period. Right, that day?
No, you can actually port it, but most people don't because of the cost.
Because the cost goes up, yeah,
Yeah.
okay. So,
Okay, yeah, and our enrollment tool will give you all the data that you need as far as making a decision on the premiums and whatnot, okay? Okay, next page is your voluntary accident plan and your critical illness cancer plan. These are not changing at all. They're still with the same company, Assurant Sun Life. The premiums are identical to what you paid before, so there's absolutely no change there. Accident plans, generally speaking, if you're very active or if you have children involved in sports, an accident plan can be a benefit to you, okay? If you don't find yourself in that situation and you don't think you need it, don't buy it, okay? It's paid on an indemnity basis, which means that the more severe an accident, the more money you're going to get, but it's all based on a schedule that Sun Life has in their system. All right, and we give you a couple of examples there to show you what that might look like. The voluntary critical illness and cancer policy, on the other hand, is kind of like a life insurance policy that you don't have to die to get. All right, that benefit is paid out on initial diagnosis of cancer, or if you have a heart attack, stroke, end-stage kidney disease, major organ failure, invasive cancer, blindness, loss of speech or hearing, paralysis, and coma. All of those things would trigger the benefit. You can choose that benefit between $5,000 and $20,000, okay? Those of you that are young in the room, I highly encourage you to look at this plan because it's dirt cheap, okay? And they give you a $50 benefit for your wellness, and that'll offset the premium. Even those of you that are middle-aged like myself might find it attractive depending on your family situation and whether you have a concern with that or not. Okay? Questions on those plans? All right. Next page gives you the instructions for how to complete your enrollment. If you would like to do it on at your desk or at home, here you go. That should walk you straight through it. Okay? I'm sorry?
I was going to add a few things.
Oh, sure, okay. We have printed on there that the deadline for completion is June 5th. That's actually been extended to June 9th. So please complete your enrollment by June 9th. You can enter and re-enter the system as many times as you want before June 9th, but just know that we're going to be pulling the data down at that time so that we can make sure you get your new ID cards prior to July 1st, okay? Also, after open enrollment closes, this system has a lot of information on it, and if you'd like to revisit it and see, your summary of benefits and coverage, or the details of your dental plan or your vision plan, all that information resides on that system. So feel free to visit it even after open enrollment. Finally, the very last page has some information about that EAP program that I told you about. All right, and that pretty much concludes my presentation. Emily had some things she wanted to add.
I'll do another 30 minutes.
Okay.
Okay, I was able to ask the HSA question. Was it you? Okay, so with the HSA, if you do have a parent living at home, you are able to use the money in your health savings account for them as long as they are tax dependent. So that's the key word. But in that situation, you'd be able to.
Right.
And then I know Phil already touched on this, but as we know, the other tiers, the employee child for the employee contribution, the employee child, the employee spouse, and the families, are the ones that saw the biggest increase. And again, we're here to help you with any other options that may be available. There are with the company that Phil mentioned called Broker Source with additional options. It's really dependent upon your situation. That could be how many children you have on the plan, if your spouse is a spousal exclusion with their employer. There's just really a lot of different factors to take into consideration, but we're here to help you figure out which is best for you.
Yep. Okay, thanks, Emily.
Yep.
All right, that's it. We do have some computers over here set up if you'd like to start your enrollment. If you have individual questions you'd like to ask me about, I'll be here as long as that takes.